Hello everyone, this is Jeb Hamburger from goldstocktrades.com. It's Monday, November 21st, 2011. It's about 11 a.m. right now, and I wanted to give an update to my readers about today's markets. Over the weekend, the Super Committee in Washington, and this morning it's been reported that they have failed to reach an agreement with the cuts that are supposed to be taking place in Washington, the 1.2 trillion in cuts. This is putting safe haven fears into the market. The Treasury market is up. The dollar market is moderately up, whereas the precious metals have been selling off. But we think that silver could be reaching a very important support and oversold level that implies a possible reversal. If you look at the long-term trend since the 2008 low, where it reached around $10, the silver market went from about $10 to close to $50. So that's a 40-point difference. Half of that would be 20 points. So we see very strong support for SLV around 27.5. That would be around a 50% retracement. It hit that after the Operation Twist announcement and bounced off. And we thought that it would close those upside gaps. And it has not. It partially filled this upside gap, but there's still upside gaps that have not been filled. That means they will eventually be filled. And this pullback in silver to this long-term trend support, which we believe is still up. We believe silver is a hedge against this economic uncertainty. We believe there's growing demand worldwide to own silver and as a hedge against the deteriorating paper currencies. And this is just not in the United States. This is in Europe. This is in Asia. There's a growing demand for silver to protect against the failure of these paper currencies that we're witnessing in Europe, and that we think that we're going to begin witnessing in the United States. So this provides, if you believe that the long-term trend in silver will hold, we believe that this could be providing, again, a secondary buy point. We do think that it's still a little bit above that line. We could see it go below 30, break 30, but that will provide a very powerful buying opportunity because we do still think that there's going to be a closure of those upside gaps. Even though it failed at the 50-day, we think that there could be a formation of a double bottom here. Now you have to understand that from the $50 to the 27.5 area, or it's close to almost a 50% correction, and that was almost as severe as the 2008, where we corrected almost around 50%. So this has been a very we've had a powerful year in silver, but with these powerful moves, you have powerful corrections, and the silver market is reaching its long-term trend. It's reaching an oversold condition. And we think that it could be providing a great opportunity if we break below the $30 area as a buying opportunity. I've been concerned about the Treasury market that has broken into all-time record highs. If you notice here, it's even surpassed the TLT, the 20-plus year Treasury bond fund, has surpassed the 2008-2009 highs. So this is really we consider an irrational bubble. It's significantly close to 22% above the 200-day moving average. It's overbought on the stochastics, and we've begun to see some negative momentum beginning to develop between the price of the Treasuries and the RSI. So that may indicate a possible topping pattern here. So this money that may be coming out of Treasuries may be going into the natural resource market, into gold and silver, and into mining stocks. So stay tuned and posted to your email inbox.